Welcome back to the deep dive. Today, we're trying to cut through the noise on something that, well, on the surface, it looks like a massive corporate flip-flop.
It really does.
We are diving deep into MicroStrategy, MSTR, and their huge announcement about setting up a US dollar cash reserve.
And this is the kind of thing that makes you scratch your head, right?
Yeah.
Especially if you followed Michael Saylor. For years, he's been the loudest critic of fiat currency.
Oh, absolutely. The famous quotes, melting ice cube, cash is trash. We've all heard them.
Exactly.
So you can imagine the reaction when MSTR announced on December 1st that they're putting aside a staggering 1.44 billion US dollars in cash.
It's a paradox.
It is, and that's the paradox we have to resolve for you. Why would the world's biggest Bitcoin accumulator suddenly start hoarding the very thing it says is worthless?
Well, the sources we've looked at show that the answer is, it's not just simple, it's profound and honestly completely bullish. This isn't a retreat.
Not a retreat.
No, it's a strategic upgrade. You're watching MSTR evolve from just being a corporate Bitcoin treasury into, well, into a full-spectrum Bitcoin capital markets institution.
And that's crucial for you to understand. This analysis is basically a blueprint for any company trying to operate on a Bitcoin standard. Think about the miners, right?
Yes.
Let's use a name like, say, BMNR as our stand-in. They're always under pressure from volatility, debt, dilution. This new strategy is all about endurance. It's setting a new standard.
It's about building a financial fortress, one designed for, generational stability. And we need to break down how this cash shield works, starting with the defense.
Okay, let's unpack that. We have to start with the main vulnerability, the thing critics have been hitting MSTR with forever, the liquidity crisis short thesis. What exactly was that bear case?
The bear case was actually pretty smart in its simplicity. It was all about fear. MSTR has a lot of debt convertible bonds, preferred stock.
Right.
And all that debt requires regular payments, interest, dividends that must be paid in US dollars. It doesn't matter what Bitcoin's price is.
And the short seller's whole argument was based on Bitcoin's volatility, wasn't it?
Exactly. The argument was, okay, what if Bitcoin crashes hard, MSTR's market cap shrinks, and suddenly they don't have the cash flow to make those fiat payments?
If they miss those payments?
Then they'd be forced into a liquidation event, a devastating one. They'd have to sell their Bitcoin at the absolute worst possible time just to pay their dollar-denominated debt. That was the whole plan to break the diamond hands.
So how does $1.44 billion solve that? I mean, that's an enormous amount of cash.
It solves it mathematically. It just takes it right off the table. The key thing to understand is that this cash isn't for, general corporate stuff.
Okay.
It is explicitly, surgically earmarked. MSCR has publicly said this money is there to cover all their current debt servicing for years to come.
Wow. So they've just completely firewalled off their fiat obligations.
Precisely. They've proven that no amount of Bitcoin price volatility can force them to sell a single Satoshi to meet those debt payments. The whole ho-dealing narrative isn't just a story anymore.
It's backed by an ironclad balance sheet, as the sources call it.
That's the perfect term for it.
I can see the immediate relevance here for companies like our stand-in, BMNR. Miners have huge operational expenses, OpEx.
It's huge. Electricity, cooling.
And that all has to be paid in fiat every month, no matter what Bitcoin is doing. This move by MSTR is a powerful de-risking template.
It absolutely is. This kind of structural defense ensures that long-term holders never get forced into selling their core asset because of short-term market noise. It protects the Treasury.
That is a phenomenal defense. But
Yeah.
okay, let's shift gears, because mitigating risk is one thing, but this is only half the story, right? This cash reserve isn't just a shield.
No, it's an offensive weapon. And this is where it gets really fascinating.
Go.
That cash acts as a massive. It's called a credit enhancement for the whole company.
Okay, credit enhancement. That sounds a little like dense financial jargon. Break that down for us. Why does that matter?
It's actually very simple. Your creditworthiness determines how much you pay for money. If you look risky, your interest rates are high.
Makes sense.
But if you can prove, beyond a shadow of a doubt, that you can pay your debts for years in advance, which MSTR just did, you instantly become a much, much safer bet in the eyes of the bond market.
And here's where it gets really interesting. If they're a safer bet, what's the actual practical advantage?
They get cheaper debt, significantly cheaper. This cash shield basically unlocks a whole new tier of low-cost financing for them. Just think about the arbitrage here.
The arbitrage.
Saylor can now go out and borrow hundreds of millions, maybe billions, at a much lower interest rate, let's say 3 or 4%. And what does he do with it? He buys Bitcoin, an asset that is historically compounded at over 100% a year.
That is the ultimate capital markets engine. You're borrowing cheap dollars to stack a massively appreciating asset. And in doing so, MSTR is effectively setting a whole new standard for the sector.
It forces everyone else, including miners like BMNR, to completely rethink their treasury strategy. Mining is so capital intensive. The ability to get cheap financing for new equipment or notes is everything.
And a strong reserve like this just signals stability. It lowers your borrowing costs across the board.
Which leads right to the next point you mentioned before, operational independence.
Right.
The old model, well, it often relied on selling more stock to raise cash to buy more Bitcoin. It was dependent on the stock market being healthy. But now, as a safer credit, they can just tap the debt markets instead.
And for existing shareholders, that is a massive win. Debt is so much less dilutive than issuing new stock.
Exactly. It lets MSTR keep stacking aggressively without watering down the ownership of current long-term holders. That Bitcoin per share metric is preserved.
And for a miner like BMNR, who constantly faces massive dilution just to expand, this is the holy grail, a blueprint for non-dilutive accumulation.
It's a model that lets you grow without punishing the people who got you there.
That is just a critical insight. Okay, let's pivot. Let's move away from pure finance and look at the regulatory and governance side of this, which I think a lot of people miss.
They're so important. For a while now, there's been this push from critics to reclassify MSTR. They want it to be called a digital asset treasury company, not a software operating company.
And that classification matters a lot because it determines whether they can get into the big stock indices like the S&P 500.
Which is a huge source of automatic institutional buying.
Absolutely.
The whole argument, the regulatory FUD, is that MSTR is just a speculative hedge fund pretending to be a tech company.
Oh.
But by holding $1.44 billion in dedicated cash reserves, that move strengthens their argument immensely. They look like a prudent, mature operating company with a robust treasury policy. Less like a gambler, more like a serious corporation.
It's a masterclass in corporate governance signaling. It's speaking directly to those super conservative institutional investors who need every box checked before they can invest.
It gives them the comfort they need.
They're turning MSTR into an asset that even the most risk-averse fund manager can look at and say, okay, I can justify this.
It takes away the biggest regulatory stick the critics had left. It just neutralizes the argument.
But let's look past the official messaging for a second, because there's one last piece to this puzzle, a more exciting one. The cash as a strategic war chest, as dry powder.
Yes. So while it's officially earmarked for debt, everyone in the financial world understands its real potential. Its offensive capability.
You mean it's ready to be deployed?
Immediately.
Yeah.
Into Bitcoin. During those moments of peak market fear, peak irrationality.
When the market throws a tantrum, as they say, and Bitcoin is trading at a huge discount?
It positions MSTR to be the ultimate whale. They're guaranteed to be there ready to buy when conditions are most favorable. This ensures they can keep outperforming everyone else who might be scrambling for cash when the market turns down.
And connecting that stability back to the grand vision, this reserve is what guarantees their longevity. It's the foundation for that merchant bank of Bitcoin idea.
This is the generational play. This cash allows them to plan their accumulation over a 25-year timeline, not worrying about a bad quarter or daily price swings. While everyone else is reacting, MSTR is executing a long-term strategy built on this ironclad foundation.
So let's bring it all together. What does this mean for you? This $1.44 billion reserve? It's not really cash. It's the foundation for MicroStrategy's next era.
That's right.
It kills the biggest short thesis. It enhances their credit so they can accumulate cheaper. It gives them operational independence, and it shields them from regulatory attacks.
This blueprint really confirms that MSTR has graduated. They're on a totally new level of financial sophistication, and they've just raised the bar for the entire industry. It's an advanced way of managing debt, equity, and operations with Bitcoin at the core.
Which leads us to our final provocative thought for you to think about. If this ironclad balance sheet strategy with dedicated fiat reserves to neutralize risk becomes the new gold standard for corporate endurance in the Bitcoin space, how many of the current digital asset companies, especially those capital-heavy miners like BMNR struggling with debt and dilution, are actually sophisticated enough to pull this off? And what happens to the ones that can't? Thanks for diving in with us.